Welcome back. Here's the big breaking news coming in. The Competition Commission of India has approved the $8.5 billion merger between Reliance Industries and Disney's India business. For more on this, we're now joined by Prakash Diwan, a known market expert. Mr. Diwan, thank you so much for joining us. First things first, there were concerns in terms of what the cricketing rights could mean as far as this merger is concerned, but they appear to have crossed the hurdle. What does this translate into?
So, I think it kind of paves the way for all the plans that Reliance Industries had outlined some time back on its media business to finally kind of start getting into action. So I think it's very clear that by the end of this year, once this is done, next year onwards, you'll start seeing all the benefits of this merger start accruing. Particularly, there'll be a lot of rationalization in terms of costs and overlaps and all. So, both the businesses, both the companies don't need to be investing energies and resources into similar kind of, verticals, but instead there will be synergies that will start benefiting Reliance in a very big way.
Let me ask a follow-up question. One concession that was being reported and speculated on that the merged entity is likely to have offered the Competition Commission is on the issue of having reasonable advertisement rates, especially in reference to cricket broadcast. How do you weigh in on that? Is that a bit of an overhang? Do you think you'll consider that as something that perhaps needs to be watched out for, perhaps more details sought?
Of course, more details will definitely make things clearer, but nonetheless, very clearly the span of these cricketing rights and the advertising rights to these events is going to be now much more bigger at a lower cost of acquisition. In a sense, the company Reliance won't have to pay that much to be able to garner those rights, and that means that they will be able to offset the lower advertising rates if they were to be implemented because of the lower cost of acquisition. So in a way, it's going to be win-win, but it's going to be good for the consumers. But I don't think the company will lose out on much of margins out there, or spreads out there.
Let's also talk about what the dynamics of this merged entity would be like. What does this mean in terms of market presence? We're talking about Reliance, which has deep roots here as far as the Indian broadcast space is concerned. Disney, of course, brings with it the dynamics of the international market. What do we make of this merged entity in terms of its market presence?
So, apart from the monetary benefits of, as I said earlier, the synergies, by investing this 11,000, 12,000 odd crores, Reliance also kind of gets a foothold into the best practices that Disney has been following all across the world. Of course, this is with the India business that we're talking about, the JV that's being formed. But I think it also starts getting a lot of benefits in terms of a pipeline of, properties that Disney has, which could eventually be leveraged upon. So my sense is that this is going to catapult Reliance or the Reliance entities which are involved here into something which is of global, class and global standards. So best-in-class kind of product, best-in-class kind of properties, and offerings will start getting into the pipeline. So that's the big advantage that Reliance has through this, apart from all the monetary parts, as I said.
About the one question about the broader dynamics of the industry, this merged entity will have a presence both in the OTT market as well as in the conventional broadcast space, creating a unified brand with synergy. How do we interpret this new journey? Would you consider this perhaps the next leg of growth as far as conventional broadcast media is concerned?
Oh, absolutely, absolutely. I mean, there are very few illustrations of this kind of advantage or synergies between OTT and the conventional broadcast area. And this brings both these together. So it kind of takes away the risk or vulnerability of a business which is dependent on either of the two. That's one. Secondly, you need to see it in context with, the FTTH rollout from Jio has been not very aggressive. But if they have content which comes through this JV in place, the FTTH will get bundled or will have bundled services along with it. So that becomes a very big advantage. I mean, if you were, as a consumer, if you were to see what you're getting when you avail of an FTTH connection from Jio and all of this comes along, there's going to be a very different kind of a synergy, which is difficult to replicate by anybody else. So from that footprint perspective, the dynamics will change dramatically. And that's why the CCI green light was very important, Ashwat, because it almost seemed like they would take away a big share of the market and a footprint which is significant. But I think this merger paves the way for that now.
Well, just for the benefit of our viewers, let's also point out that with this CCI approval coming in, it's a big step forward, as Mr. Diwan was pointing out. Also, bear in mind that the NCLT Mumbai has already granted its approval, so a big leg up as far as this $8.5 billion merger is concerned. Also coming in on this conversation is with us Mr. Raghunath S. He's a professor at IIM Bangalore. Mr. Raghunath, thank you so much for joining us. Same question that I put to Mr. Diwan to you as well. A combined entity with presence in both the OTT space and the conventional broadcast space. What does that mean for the broader market dynamics?
It is very good for the broader market dynamics for the simple reason that it ups the ante for all the players. And moreover, the unleashing of content and the decoupling of vertical integration, which has been the case ever since digitalization has crept into the media and entertainment space, has been given the kind of fillip that it should require. So I think going forward, it is great news, not just for consumers, but also for the kind of assets and technologies that will be deployed and the overall increase in consumption as well as quality.
Just a word as far as the Indian broader consumption story is concerned. We're looking at an increasing number of people going digital. There has been the fastest rollout of 5G. A lot of people going to their smart devices to access the latest in content. India, of course, has a huge appetite in terms of data consumption. Is this a space that this merged entity is ready and geared to benefit from that broader trend that we're seeing here in the Indian market?
Absolutely. Repurposing of content to devices and to technologies is the next big challenge for all the players. And when these two behemoths come together, obviously the efficiency and the effectiveness with which they will address some of these areas as technology changes and as access becomes ubiquitous, this is going to become a game changer going forward.
Let me also just ask you, this is a space that is dominated by big tech players. We're talking about the likes of Amazon Prime. We're talking about the likes of Netflix bringing in their wherewithal and presence and their dynamics across global geographies and bringing them here to India into translating into opportunities. How tough of a competition will this combined entity be able to serve some of these more conventional rooted players, the likes of Amazon, Netflix?
I think today, because digitalization has made everybody realize the fact that this is a market of one. What I mean is, it is a one-on-one stratified marketplace. Today, consumption has been so very personalized that it is the algorithm which continues to push for focus from consumers who have a certain preference. So what is going to happen in a very stratified market? The collection of content and the deployment of technology are going to make players either better or worse in this hyper-personalization game which is emerging. So I think this is a great play. This is a humongous library of content. There is technology muscle which is coming through because both these players are capable of delivering to the last mile in a manner in which the consumption becomes stratified as it will be, and people will get exactly what they want.
That's an interesting point, Mr. Raghunath, that you've raised with respect to customization and shaping content in a unique way for individual users. I'll come to that point in just a bit. But Mr. Diwan, let me take that question across to you. Just moments back, we were discussing about the synergies that this merged entity will have across the conventional broadcast space as well as the OTT players. The same question to you. There are very deeply rooted players, big tech players, Sony, Amazon, Netflix, who will be competing with this combined entity. Does this combined entity of Reliance and Disney perhaps have an edge, given that their presence in the broadcast space as well?
No, absolutely, Ashwin. So what this JV brings about, which is a differentiator as compared to the other players, is they don't just have technology of a very high-end contemporary usage, but it's also the distribution and the reach. Which a lot of the larger players that you mentioned probably are still to build. So what happens if you have the Disney content library, as Professor Raghunath also mentioned, which can help customization to a very different level. The reach that the Reliance brings in the Indian market is phenomenal. So that's a combination that's going to be a big edge. Others might have to take much longer and invest much more into reaching that kind of a scale. So from that perspective, it's definitely a big advantage.
Let's also, in fact, bring in Mr. Gurmeet Chadda. He's the managing partner and CIO of Complete Circle, joining us now. Mr. Chadda, thank you so much for taking time out, for speaking to us. Big news, breaking news, the merger being granted the CCI nod, the NCLT nod is already in the pocket. Let's talk about the dynamics going forward. We were talking about how this merged entity, given the strengths that Reliance enjoys across a whole gamut of industries, will be able to add in terms of synergies to this combined entity. The question I want to ask you is, we're speaking of customized offerings for users. We already have the Jio as the single largest telecom service provider. Combined with that, when you look at this merged entity in terms of allowing new, unique, customized offerings, is that an opportunity that this merged entity will look to exploit?
Yeah, I mean, in addition to it, obviously that's one opportunity they will look to exploit, but it also creates a huge digital entertainment giant. They have the content muscle. Obviously, the tech capabilities are well known. They have the reach in terms of distribution. They have the relative analytics and insight into what content consumes where. And look at where the global entertainment industry is headed. Look at what Netflix has done. Netflix is today almost $300 billion valuation. India's largest company is still not at $300 billion valuation. So obviously, it's a very long journey. It's a country of 140 crore people with 90%, internet penetration. So huge long-term implications. Second is also a lot of synergy it brings in. You have all the iconic channels, including Star, Color, etc., coming in under one platform, and then you also get, the Disney content, which is very diverse and across different genres. You have a lot of sport content. Disney obviously lost a lot of customers, almost 23 million customers they lost when they did not get the IPL rights. So this brings in perfect synergy, and it's a win-win. And it comes just before the AGM of Reliance, which is tomorrow. The industry, I think this will have a bit of a positive above even on other media stocks. In my view, this sector has not participated at all in the rally. Right, few days back there was the news of Sony and Zee, settling their issues amongst themselves. So this will have a bit of a rub up on this sector. This media sector hasn't really participated in the rally. With consolidation, I think there's some tariff discipline will also come.
You've brought in a couple of very interesting points. Let me ask you on that. One of the aspects that you referred to was, of course, the cricketing properties that both the networks invested in prior to the merger. One aspect that I want to get your thoughts on is that a lot of large, big money has been chasing those cricketing rights, $9.5 billion between the two of them, Reliance and Disney. Do you see that yielding the desired results? Do we still have that cricketing appetite? There's been a bit of an overdose, but do you think those $9.5 billion will yield the kind of returns that the merged entity will hope for?
Well, absolutely. I think cricket, every year we keep questioning this. It just keeps going up. I remember when, an IPL first auction happened, the figure was not even 1/30th of what we are talking about. I think the fever just keeps on gripping. We are a cricket worshipping nation, I would say, not a loving nation. We saw with the T20 World Cup viewership, which broke all records. Both during the league stages and knockout stages, and the sport is also going global. So I think sports is one differentiator which gets you the eyeballs, get you the necessary revenues. You saw what happened to Disney when they didn't win the IPL. See the number of customers. A lot of it is also hygiene. You also continuously need to create new content, get new sports rights so that you don't leak. People have limited mind space and shelf space. So in my view, yes, it's steep. But I think the commercials eventually should justify.
Interesting. Mr. Dharmendra Kumar is also joining us, former chairperson at the CCI, the Competition Commission. Mr. Kumar, thank you so much for being a part of this conversation. How significant a development is this? There was wide reportage as to concerns that the competition watchdog may have had with respect to the presence that this entity will have in the Indian broadcast space. Your quick thoughts on how significant a step this is for CCI to grant its nod?
Well, thank you very much. It's a pleasure speaking to your viewers on this channel. I feel it's a very, very significant development. First of all, it would lead to India's largest entertainment conglomerate, which would be roughly 70,000 crores, above $8.5 billion. And there would be roughly 558 million viewership, which is one of the most large base anywhere in the world. But I don't have fuller details yet. I'm told that there are several voluntary modifications which the parties have pledged to the CCI, which, as I wrote in one of my pieces a couple of days ago in Economic Times, this would lead to an expeditious approval, because CCI's concern would only be, in my view, that there would be a dominant mega merged entity, a behemoth, and this could lead to, in the cricket space in particular, there would be a dominant undertaking. This would lead to, in the pricing, for instance, there would be a unilateral rates and so on. So there could be various modifications, like capping advertising rates during cricket matches for a defined period, or licensing high-value cricket content to competitors on a non-exclusive basis, or divesting overlapping assets in related markets, and committing to a greater transparency in pricing, content and contract terms, and so on. But in any case, whatever the parties have committed to the CCI would have led to CCI's conclusion in the matter that there would be no significant, or there would be no appreciable adverse impact on competition in the market. Of course, there are several others also. So I feel that it's a very significant but a very good development, which would lead to a deep-pocketed mega merged entity. And for the viewers, in India, cricket is like a religion. This would lead to probably a much greater, much easier, and much wider coverage all over the country.
आप जिस व्यक्ति से बात कर रहे हैं
Mr. Kumar, just one follow-up question. I believe we've lost Mr. Kumar there. We'll try to establish connection with him once again to learn more about perhaps the dynamics of this conversation between the CCI as well as the merged entity. What are the factors that perhaps led to this grant of approval? But let's continue that conversation we were having earlier. Mr. Chadda raised a very valid point with respect to the appetite that the Indian market has as far as cricket is concerned. Let me bring that conversation back to Mr. Diwan. Mr. Diwan, again, $9.5 billion chasing those cricketing rights. Do you see them yielding results, especially in light of what Mr. Kumar just pointed out, that the companies are likely to have made various concessions to seek the CCI nod? Is that something that would be weighing on your mind?
So we'll, of course, as I said earlier, wait for the details, Ashmit, to get the granularity on making an assessment of the impact. But as I said, the JV will also clip some costs in a lot of properties, in a lot of the broadcast. The expenditure that's involved in terms of selling these or reselling these to buyers is something which they can definitely have much more leeway in now that they're not kind of wanting to. They don't need to kind of be looking over their shoulder, each of their shoulders, to figure out what the competition is doing. That's one. Second is you will have multiple streams that will keep getting generated, tangentially from these cricketing rights. So the money that has been put to acquire these rights may have a little bit of a longer payback period, slightly, but incrementally, but may not upset the revenue model very dramatically. And of course, you have a sports lineup, which is far more than just cricketing rights to focus on to offset and nurture. So you have the English Premier League, potentially the Olympics, the NBA, the Pro Kabaddi. I mean, there are lots that's in the pipeline. So I would believe the focus will also go to nurturing these nascent properties and assets, and that's what the strategy would probably be now.
Mm-hmm. Right. Let's go back to Mr. Kumar. I think we've been successful in establishing that connection with him once again. Mr. Kumar, thank you once again. I think we lost you there for a moment. The question I wanted to ask you is the nature of these concessions that have been made, that are likely to have been made. We're still awaiting details, but just borrowing from your past experience, in situations such as these, does it require perhaps some form of a cap, some form of a ceiling to have been imposed? Is it more of perhaps a voluntary undertaking with perhaps not as definitive criteria? Just borrowing from your experience to understand what the implications of these concessions could be.
See, if we view the last one, which was viewed by the CCI, which was on Zee and Sony merger, which of course didn't take off, they committed several voluntary commitments, and CCI was satisfied and they approved the merger in the phase 1 basis only. Now, I presume that in a similar manner, in this case, the parties would have given some voluntary commitments which would have satisfied CCI. Now, what kind of those commitments are, I really don't know, because they could be they could be structural, they could be behavioral, they could be something on pricing, they could be something on transparency, and they could be something on the interface by the competitors. But altogether, I think the commitments would be significant, which would have reduced CCI's concern for emergence of a monopoly in this space, which would lead to, of course, the biggest entity in the entertainment space. But I'm happy on this thing that this has been approved, number one. Number two, that it would also lead to not only the infusion of funds, the parties are, of course, deep-pocketed, but also I would say that the technological improvements and several new features which they would have brought in. After all, their total market coverage is roughly 55 crores or even more. And cricket, as I said, is the biggest, is like a religion in India, and it covers the entire country. So I presume that this behemoth would be in a position to serve all the entire audience across the country, and the RIL and Disney and Viacom and so on. They would make sure that this serves across the length and breadth of the country, the cricket rights and so on, and the price and so on. These are the things which CCI would have discussed with them, the approval. While approval was granted, what would be the rates for the advertisement? So they could be. I really don't know. There could be price freeze, for example, and divestment of certain non-cricket channels. So the details are yet to come out. But this is for certain that CCI is a very professional body, that they would have examined all the commitments given by the parties and come to a satisfactory, come to a conclusion that there is no longer any appreciable adverse impact on the market.
Right, we're almost out of time here. I'll just come to Mr. Raghunath for one final question. Mr. Raghunath, NCLT approval has already been granted. Now we learn that CCI has also granted its nod. Where do we go from here? How many steps away are we from finalizing this merger, this massive merger in the Indian media space?
Yes. So what is your question?
The question I only want to ask is, what does the road ahead look like in terms of regulatory approvals before we actually finalize the merger?
Yeah, I think the most important thing relates to the market. And if there are areas and covenants where they have had an understanding and they know what they have to do, I think the critical piece is how do they move this forward with a very strong governance and accountability system. In other words, the way these two parties come together and design their clear roles and assign them to the right people along with the right tools will actually build their synergy in terms of capability and reputation, and will create a very compelling narrative for investors. And I think that is the way forward from where we are.
Interesting thoughts from all of our panelists. I'd like to thank Mr. Diwan, Mr. Chadda, Mr. Kumar, as well as Mr. Raghunath for sharing their thoughts and perspective on this massive media deal. We're talking about a merged entity, $8.5 billion. That stacks up to north of 70,000 crore rupees. A merged entity which has presence across the conventional broadcast space, across the OTT space as well, that is likely to take on the much larger, the behemoths, the likes of Amazon, Sony, Netflix. And interestingly, what our panelists are telling us is that the synergies that this merger will create will not only bring in new technologies, but will result in a customized offering for a country that is hungry for data, that is hungry for content, gauging by the sheer number of the gigabytes we're looking at in terms of downloads. So again, massive appetite and a merged entity ready to cater to that massive Indian appetite. With that, we're heading into a very short break, but we'll continue with more news and updates on the other side. Keep watching.